Australia's property market is entering a new phase. Gone are the days of easy gains, as the latest Pulse report from Hotspotting reveals investors must now dig deeper to find suburbs that deliver both strong yields and long-term growth. For more, I'm joined by Tim Graham from the team at Hotspotting. Tim, what inspired your latest edition of the Pulse report? Take us through what we're seeing.
Thanks, Mike. So we've been doing the Pulse report for a number of years now. It was a report we sort of designed for the times as interest rates started to rise in 2022. And essentially what it is the top 50 locations in Australia where you can achieve an above average rental yield as well as not forgiving capital growth. For a long time people thought you could either have one or the other. We say if you do your research and you pick the right locations, you can have your cake and eat it too.
Well said. How have rapid price rises affected rental yields across the country? Can you give us a helicopter view?
Yeah, look, I mean, when we first started to do this report back in 2022, we were sort of starting with rental yields above 6%. So you got markets like in the southern suburbs of Perth, for instance, and that's sort of Rockingham, LGA, and then also in the northern suburbs of Adelaide, for instance, where you could be achieving 6-7% rental yields, but getting some significant capital growth as well. But over the last couple of years, off the back of that growth, those rental yields have certainly been swallowed up. When we first started doing this, we were sort of saying, look, we want the high rental yields, we want the growth, and we, we look back at the results of our May 2024 report, and we look at what growth we've had since. And we've achieved average about 18%, with the national market average about 3%. So, you're 6 timing the competition, but you might still be getting a 7% rental yield. But those days are becoming tougher and tougher to find.
Absolutely. Well, I'm glad you folks are keeping an eye on it, because it does seem to change quite a bit. But which cities or regions are emerging as the strongest dual benefit markets at the moment? What did you find?
Look, Queensland's still got 20 of the 50, but look, other areas, Western Australia's still got some of those markets as well. But what we've started to see is a lot of the unit markets are actually where we're seeing most of this growth. And there's been a paradigm shift in real estate where people have to acknowledge that if you want capital growth, you don't have to always have houses. And in fact, Cotality, previously CoreLogic, came out and said that 62% of capital city markets, units are actually outperforming houses on capital growth and rental yields.
Well, there you go. Well, there's so many of them. I feel like they're putting up new ones all the time. But why are unit markets suddenly becoming more attractive to investors? Is it just because there's so many of them?
No, I wouldn't say. It's probably the opposite of that, actually. Right. It's more so that, if we have an influx of apartments, it's probably going to turn investors off. And when we talk about unit markets, we're not necessarily talking about high-rise apartments either. Okay. A unit could be a townhouse, it could be a standalone unit. And especially in the regions, this is where we're finding a lot of people are saying, well, listen, a great example would be Toowoomba. You go into the Toowoomba market, we've seen significant growth there over the last 5 years, and yields have really dropped away in the housing market, but you could still buy very affordably a unit, and you might be getting a 5% rental yield and still achieving really strong capital growth. So units don't have to necessarily be apartments, and the smart investors taking notice that this is where the opportunities are.
Interesting. Okay, so what role do regional towns play in 2025, do you think, when it comes to the investment landscape? Are we seeing more of those those tree changes and things like that?
Look, there's still certainly some strong markets in the regions. Areas like Geraldton in Western Australia has been very strong. Albury-Wodonga, areas like Wagga Wagga. But again, I mentioned the 20 locations from Queensland in this mix as well. So there's areas like Mackay that are showing really strong yields, especially in the unit markets where we've seen upwards of 20% capital growth as well in the last 12 months.
Yeah, all beautiful parts of the world actually as well. But can you explain how the Pulse continues to outperform national benchmarks? Take us through a bit about how
look, the way that we do this, it's not all about getting a strong rental yield, because strong rental yield without capital growth is not going to help any investor really get ahead, unless you've got no debt, of course, and you're just after the cash flow. But what we do is we put our every location, starting with rental yields above 5.7% for this edition, we run them through what we call our empirical formula, just to make sure that the locations are still really strong from a long-term growth perspective. So our empirical formula is an acronym. I won't bore you with all of it, but basically what it does, it looks through the local economy, make sure it's diverse. We have a minimum market size, needs to be growing population, low vacancy rates, affordable as well. Which
it's always about the sort of data you put into these things.
Exactly right. Yeah. But and then the last one, the L in this is probably the most important one, is low risk. And low risk, we mean we don't target areas that are propped up by one industry like agriculture, tourism or mining.
Right, okay, that's just good to know, right? There's these hotspots, literally. Are investors shifting their strategies or simply waiting for that next boom boom, what does the sentiment seem to look?
The smart investor is having to pivot their strategy.
Okay.
I think interestingly, if we look back over the last couple of years now, there's probably an extra 2,000 or 3,000 buyers agents now that weren't there a couple of years ago. And investors really do have a bit of a sweet spot, whether it's yield or price point or whatever it may be, which means you've got a lot of investors getting supported by buyers agents in the same areas. So if you want to stick with the same, you're going to be competing with the same, and that's become very challenging for a lot of both investors and buyers agents, meaning they've got to start pivoting and looking at either new areas or new products, and that could be units.
Interesting. Okay, so what common mistakes are property buyers making in this new phase that we've been discussing so far?
I think people just not realising that things have changed. You know, those times of 2022, 2023, where you could get those types of yields in the housing market in larger population bases, they're just they're a long way behind us now, unfortunately. So we do need to start to look at what the new data is telling us and pick up on the new trends.
Okay, so how should investors balance cash flow with potential capital growth in 2025? And there's not much of it left.
No, that's true. I would say, look, one of the things that we focus on here is still the higher rental yields of 5.7%, but you're not trying to shoot the lights out on 20-30% growth like we may have in the past. It does mean that you may be needing to go into some more of those rural areas, and we're not for a moment saying that this report is for everybody. It's specifically for people that are after that cash flow without wanting to give up on capital growth. But if you're not that fussed about cash flow and you're just after the long-term capital growth, we've got a range of other reports to help that investor too.
There you go. You've got something for everyone. But Tim, finally, where do you see the next wave of opportunity over the next 12 months?
Look, as we said, 20 of the top 50 of these markets were in Queensland. Obviously, with the Olympic Games still ahead of us up there, I still think Queensland's best days are ahead of it. It's not the Brisbane Olympic Games; it's the Queensland Olympic Games. So you've got markets like your Sunshine Coast and all the way up through Bundaberg and then on to Mackay that are all got really strong stories ahead of it. So for that investor who's willing to go away from the masses of what everybody's been doing for the last few years and really start to open their mind up to some of these new areas, those are the markets I'd be focusing on.
Tim, where can we get our hands on this report and or reports down the track? I know you and the team are all constantly watching this stuff. If people do want to get involved, learn a little bit and hopefully keep on top of this stuff, I don't know how you do it. Where's the best place to go? Yeah,
look, just go and jump on our website. We've got a range of reports at www.hotspotting.com.au. Otherwise, we also have some memberships in there which gives you access to a lot more reports.
And what sort of folks are you expecting to come knocking on the door?
What sort of folks?
Yeah, clientele.
Well, look, we probably cater about 80% of our market is B2B now. So real estate professionals, mortgage brokers, buyers agents, of course. And then the balance of people go to the website are typically consumers saying, look, I'm looking for the best opportunity for my personal portfolio. And that's where we get them. Okay, so to round out our discussion, let's get a sentiment check on exactly where we're headed next. I'd be saying to people, look, right now, if you're looking to get into the market for 2026, focus on those affordable markets with interest rates still where they are at the moment. Cash flow is important. This report will help you find cash flow and a mixture of strong growth. Good on you. Tim, as always, it's wonderful to speak to you, and thank you for presenting Hotspotting right here on Ticker as well. Pleasure. Thanks, Mike.